Business-wise, the pandemic actually accelerated a trend that we were perceiving already in the market. We came to realize that over the last few years, especially after the financial shock 2008, 2009, some of the trends and business trends and commerce trends have been shifting gradually into diversifying probably the source of manufacturing. It was a natural phenomenon and an evolution of, among other things, increasing costs in China, because as more people became part of the supply chain, the cost of manufacturing in China started to rise compared to other alternatives. And then you have other countries in the Southeast Asia and India probably that will come to replace something that was labor intensive with high productivity and low wages. As wages increased in China, then and productivity not moving alongside with that, it was clear that in the longer run there will be a shift moving south of, say, Shanghai, Hong Kong, and that area, that could jeopardize Panama Canal's position, because then the alternative of coming in the long route through Suez, making multiple stops, became an option to increase asset rotation or turnover for the vessels and investments they had made. So looking forward, before COVID, the issue was, okay, how do we prepare to remain competitive in an environment that is going to have less growth in the manufacturing sector, which has more tolerance to transportation costs. And that is going to be substituted by energy products and commodities originating in the US with destination Asia, which is essentially a lower value cargo, which in turn has lower tolerance to transportation costs. So our portfolio, look from the clients we serve, was moving away from high price to lower prices. And that demanded a new approach to the business. And we were doing exercises about that shortly before. As a matter of fact, we had a meeting in London before COVID, announcing that we were introducing freshwater surcharge, which was the first dynamic price applied to any of the services provided by the Panama Canal. So we were turning more into supply and demand, and this concept of value, and how could we price under at a different value system. At the very beginning, yes, and I have to say that one of the reasons for that was essentially the fact that we announced it on January 15 to be effective February 15. So, okay, fine. I agree that it was relatively sudden, and they didn't have capacity to adjust. But we dictated that concept on the basis that for us, demand for Panama Canal traffic is essentially inelastic. But I have examples of companies that made amendments to their contracts, and they introduced the water surcharge clause, and they charged, say, 47 million in surcharges to their customers, and our surcharge was about 17. So they made a net 30. Yeah. So those things happen, and that depends on how transferable the price is to the final user. And we thought two things about it. First, that it was verifiable. We didn't have control to it. Actually, it was rainfall who dictated what the surcharge value was. And we generated a formula for it. And not only that, the second element, compared to an implicit forward rate, we had a graph in our system that everyone could look at, saying what will be the lake level in the next 60 days. So you can make a decision on what the payload factor on your vessel is going to be depending on that forecast. of course, it was not for attribution and not for responsibility, but it was indicative. So that was the first test about supply and demand and price. So the next one comes when we see that we have a significant demand. We expected a decline in traffic, evidenced by what happened from May to about June, July of 2020. That was the first quarter immediately after shutdowns all over the world. And yes, we forecasted it alongside what happened in that quarter. And we expected in 2021, fiscal 2021, a reduction of about 1,250 transits. And the reduction was about 27. Immediately after, then it was incredible demand for goods and services in the end markets. And then all supply chains were distorted because empties were not located where they were demanded, and there were subsequent shutdowns in different ports in China. So maritime business was in shambles in a way, which led to the possibility of increasing prices, and shipping companies have enjoyed the most fantastic years ever, indeed. As a matter of fact, if you look at our results, not only we had more traffic than anticipated, we have changed our reservation system. And our bookings are now done on supply and demand. We have introduced some slots that are subject to supply and demand. And then when we tendered them out, we had cases in excess of $1 million per transit just to get a slot, because the system is operating at that level, at that capacity. Yes, for liner systems, long-term planning is common, sure. But that doesn't mean that the value of time for a liner is any less than the value of time for a tramp. Because once they have a contract, they must deliver on time. So time becomes of an essence, and we are a shortcut. Being a shortcut led to a situation that made us think, listen, if time is of essence, there is a value to it, then the canal has some value which is not being captured by tolls. Tolls essentially reflect the fact that we are a public service. Mm-hmm. But the price dynamics reflects scarcity, either water, time, transits, whatever. And then you have to generate a value. You cannot push that long term, because you have to bring the system to some sort of steady state eventually, that you introduce more predictability and it's less subject to distortions and short-term shocks. And to do that, then long-term, what we are doing is, okay, we're gonna set a system that is open, similar to what we did with water. This is our schedule, say 7 days into the future. If there is any slot or is there any dynamic on that allocation, it's for everyone to see. And then people will tender on it. And we have to recreate rules of engagement that will allow for it to be transparent, some sort of predictable in the sense that the operation of it being predictable. It's not that someone just woke up and said, you know, I'm gonna give you this slot. But it's predictable and people understand the system. Yeah. The same way you understand how to book a seat on a plane. And then they give you options, you know, you come 3 days before, it's lower, you come 5 days later, it's higher. Something along those lines is gonna be critical in order to gauge one layer of our price structure, which is gonna be dynamic. Looking into the future, what we are saying is, we're gonna have a price system that has 3 layers. The first layer is a fixed cost layer that essentially defines if you go to the new lock, you're gonna pay X. If you come through the Panamax locks, you're gonna pay Y, and that's a base price. On top of that, you're gonna have a second layer that is determined by vessel capacity. Mm-hmm. And then there is a third layer, which is a reduced number of items, but anyhow, that will be more dependent on supply, demand, and market dynamics. For Trumps, yes. Not necessarily for long-term commitments. Because usually long-term commitments, containers, is based on long-term contracts. But on commodities, including oil products, energy products, yes, it does. It does and makes a difference. Well, happy to announce first that we have entered an agreement with the U.S. Army Corps of Engineers. Okay. Bear in mind that the U.S. Army Corps of Engineers built the canal. So they have huge and incredible amount of information about the operation of the canal, even earlier plans when it was under U.S. administration in generating new sources of water. So they took the challenge on defining how we're going to operate the canal and how we're going to find new sources of water. We had a steady decline in overall rainfall levels throughout the 21st century. And not only that, we had higher volatility. So we have years that you have extreme flooding, and then you have other periods that you have no water at all. And that's when we introduced the freshwater surcharge, because we had the driest year in probably 70 years history at that time. And then we thought that price was the best way to allocate scarcity. And that's the reason of the surcharge. That being said, what we are looking at is three elements. Whatever solution we find has to be under Panama Canal control. We cannot outsource water. Rainfall is enough. So we cannot rely on someone else bringing water to the Panama Canal. The second element is, okay, where do we find the volume? And finding the volume, there are several options. One option is understanding that municipal water use is on the rise because population pressures and everything else. Probably source municipal water from other reservoirs different to the Panama Canal. So that will generate water to the canal and satisfy demand for human consumption. It yields to a national conflict because eventually, why should we save water for foreigners? You can see the slogan. Wouldn't like to be quoted on that one, but you can see the slogan coming up. Mm-hmm. So somehow we have to generate some distance between how the population sources its water and manages it from the Panama Canal operation. And one idea will be to source municipal water from other reservoirs. Even if we have to make the investment, because at the end, we are generating water for the operation. Circumstantially, it will be our capex, but at the end, it's an investment that yields more water volumes for the operation. That's the second one. I think that there are several reservoirs already in operation. For example, Bayano, which is further east from the airport, you have a water reservoir already existent. Even if you have to make new reservoirs, the actual size of the reservoir is significantly smaller if you want to deal with municipal water compared to the volumes that are required for Panama Canal operation. So the footprint should be smaller. So we are considering the possibility of recycling water when and if water quality declines. What happens is when we have a lower lake level, then we have less water, and saltwater intrusion dilutes in a smaller volume. So the salt concentration increases, and then as a consequence of that, you cannot operate the municipal water plants, because the raw water that comes to be processed has a different composition. So I think that problem could be resolved by introducing technology. You have sensors in the lake, and whenever you trigger a specific saltwater intrusion at the lake level, then you start sucking up water from the bottom because salt water is heavier, and then process it and then send it back to the lake. And you can do that even with the lateral basins that we have in the neolocks. And this is something that is a relatively simple engineering solution to a problem. The question is, the cost-benefit analysis, how much it's going to cost us, not only initial investment, but operational investment, and what is the water yield associated with it. So that's another area that we will be exploring. And there's a third one, is can we segment Gatun Lake? You see, the lake was designed, or the lake system, including Alajuela, the lake system was designed for steady rainfall throughout 9 months of the year. Aside from the fact that rainfall itself is lower, the volatility you cannot handle, because when you have excess water, you don't have a reservoir to store it. So if we can segment the lake within our own property and have incremental capacity, then we could manage extreme phenomena and regulate it for the times that we don't have, or we have a very dry season. So it's a very interesting solution system. And that's why we hire the U.S. Army Corps of Engineers. And the other element that is important with them is that they had a very recent experience in New Orleans with Katrina. And soil conditions in New Orleans and swamps and the like, which is soft material, I think is very similar to soft material we have around here. So if they master that there, we can benefit from their experience handling that situation, especially when they build dikes and dams. You have the multimodal system in the U.S. all compressed and taken to the limit. So we have airports, we have ports. Can we handle at the Panamanian cost of doing it? Not the Panama Canal, at the Panamanian cost of doing it. Serve as a escape valve for congestion, and the moment is now. Can we repack here and send by air to the final destinations so they avoid trucking, ports, railroad? But take it from the East Coast, Savannah, Norfolk, New York. The system is being overloaded. So if we can grasp a portion of that market, and it is not the canal, if we can get the right partner in order to take that opportunity, that will be interesting. Are we green at this moment? No. We are not carbon neutral. We are carbon positive. Because we have bunker power plants. They operate occasionally, but they are there. We have gasoline and diesel cars. We have diesel tugboats, boats, and everything else. So we acknowledge that in that regard, we are not yet there. The other element is that we save the world tons of CO2 emissions because we are a shortcut. But to us, it's a given because that already is there since day one. So what can we do to improve on that? So what are we trying to do? In order to become carbon neutral by the end of the decade, we have a plan whereby we're going to change most of our assets that are CO2 producing assets into either minimizing it or making zero emissions. But we have to minimize that. The question at this moment is there enough technology to make it zero emissions? So for that reason, we did not target to be like IMO 2050, that is zero emissions. We target to be carbon neutral. In order to compensate and get the carbon credits, we have requested the government the acquisition of a significant tracts of land in order to do reforestation and do sustainable agriculture. So that will give us the credit in order to neutralize whatever marginal emissions will remain at the canal. We have major problems. What do we do with these power plants which are relatively new? We shut them down, we sell them down, we write them off. What do we do? We will replace some of our power generation with solar panels. Most of the power that we use at the Panama Canal is hydroelectric power because when we transfer from Alajuela to Gatun, then we run the power plant and run at the river mode, so
Okay, yeah.
that is there. We are a very efficient energy operation. We need, as far as electricity is concerned, about 30 megawatts of installed capacity. We have 168. But part of that is diesel and bunker fuel. So that is the issue. Other things that we are going to do, we are consolidating our offices in a way that we can have new buildings that are really efficient energy-related buildings. And that is something that we will do. How do we translate that into our business model? Probably by the mid of this decade, we will introduce a surcharge, if you want to call it that way, that is going to be directly related to the level of CO2 emissions the vessel brings. Because in as much as we save the world tons of CO2 emissions because we are a shortcut, those who breathe whatever remaining CO2 are Panamanians.
Yeah.
So that being said, then we have to go forward and say, okay, we're going to price accordingly. And that's the reason why probably when the shipping world comes to terms in how we're going to certify the vessel, then we will peg to that certification a price attached to it. The lower your carbon emissions, the lower the surcharge, the higher the carbon emissions, the higher the surcharge.